Okay, everybody, so in this video, we're going to be talking about home ownership and how to prepare yourself for it. I know it's everybody's dream to own a home one day, so what I want to do is just help prepare you guys for that moment. It's actually, in fact, not as hard as many people think, as long as you guys put in the work and put yourself in a position to make this possible. So in this video, I'm going to be going over 8 easy steps, so that way you guys know what to expect whenever it comes for you to buy a home one day. I've always helped plenty of people buy and sell their first home because I am in the real estate field. For those that don't know, I'm a licensed real estate agent, and I'm also a licensed mortgage loan originator as well, so I do have quite a bit of experience in that field. But what I want to do now is help the people in my community achieve home ownership one day through this video or other future videos that I will make. If you're already subscribed, then welcome back. But if you guys are new to my channel, my name is Ismael Sandiford, and you are now watching Just Money, where we talk about financial related topics such as personal and business, credit, real estate, and other financial related topics. So if that's something you're into, then you're probably going to want to consider subscribing. But without further ado, let's get into today's video. Okay, so jumping right into it, the first step towards home ownership is making sure you have a good credit score. The reason why you want a good credit score is so that way you can actually be approved for the mortgage loan in order to get the home that you're trying to buy. Because if you don't meet the credit score requirements that these mortgage lenders want, then you will not be approved for a mortgage loan. That's why on my YouTube channel, I'm always talking about credit and credit building, because the truth is, without having good credit, you're not going to have access to plenty of good things in life. Whether it be business loans, business credit cards, or even mortgages like we're talking about now, you're not going to have access to any of that kind of stuff. So start building your credit as soon as possible. And again, I know I always talk about building credit on my YouTube channel, but the truth is, as I continue to keep growing on YouTube, I'm going to start talking about more advanced things like investing in real estate. So that way you guys can have cash flow and have some type of passive income coming in. So that way you're not always trading your time for money and can do things you actually like to do. But back to having a good credit score. The credit score that I would always try to aim to at least have is a 700 plus credit score. If you have a 700 credit score or more, then you'll always be approved for a mortgage loan, and then you'll always get the best rates as possible if you're ever getting something called an FHA mortgage loan. People that have a 700 credit score are literally going to get the same best interest rate as someone who has an 800 plus credit score if they're ever obtaining something called an FHA mortgage loan, which I'll talk about a little later in this video. So you should always aim to have a minimum credit score of 700 or above. Now don't get me wrong, if you guys don't have this credit score, then that's fine. You can still get approved for a mortgage loan even though you don't have a 700 plus credit score. I only say 700 or more so that way you guys can get the best interest rates as possible if you ever decide to get an FHA mortgage loan. And so that way you guys don't have to put a lot of money down when you're buying your first home. Because really, if you guys have a 580 credit score, then you can still qualify for a mortgage loan. And also, even if you have a 500 credit score, that'll still qualify you for a mortgage loan. Now, would I recommend that you have that credit score? No, of course not. Because yes, you can still get a home with a 500 credit score, but at that point, you're going to be required to put a whole lot more money down, like 10% down. When in reality, you can put as little as 3% down of the purchase price by getting something called a conventional mortgage loan, which I'll talk about a little later in this video. So start working on your guys' credit if you guys haven't yet already, so that way you put yourself in a position to own a home one day. And if you guys don't know how to build credit, or you guys don't know how to get started, then there's plenty of other videos on my channel showing you exactly how to do this in a few different ways, so just feel free to browse around. But that's going to be the first step towards home ownership. Now let's talk about the second. The second step you can do to prepare yourself to buy a home one day is lowering your debt to income ratio. For those that don't know what debt to income ratio, this is pretty much how much you make every month versus how much you owe every month. You don't want to have too much debt that you owe every month, because if you have too much debt, then you're not going to qualify for a mortgage loan. Now, depending on what kind of mortgage loan you get will determine how much monthly debt you're allowed to have. Some mortgage lenders will allow you to have more debt, and some other mortgage lenders will only allow you to have less. Like for example, there's some mortgage loans out there that will allow you to have a 43% debt to income ratio in order to obtain a mortgage loan. So let me give you guys a quick example of this. If you guys are making $5,000 a month, then 43% of $5,000 is going to be $2,150. So this means the max debt that you're allowed to have every month if you're making $5,000 a month is going to be $2,150. But just because they're allowing you to carry this much debt every month doesn't mean you should. Because honestly, the more debt that you have, then the less house you can afford. Mortgage lenders will literally not approve you for a higher amount if you have too much debt, because this is affecting something called your purchase power. So pretty much the less debt that you have, then the more money that these mortgage lenders will let you borrow. So I would always try to aim to have less than a 25% debt to income ratio. But obviously, if you guys can lower your debt to income ratio more than that, then the better. But moving on to step number 3 now, saving for a down payment. Now, depending on what mortgage loan you get will determine what your down payment is going to be. If you get something called an FHA mortgage loan, which is a famous government-backed mortgage loan that most first-time home buyers tend to get, then you're only going to need to put 3.5% down of whatever the purchase price is. So if a property costs $500,000, then 3.5% down of that is going to be $17,500. And for this mortgage loan, you're only going to need a 580 credit score. Now, if you're getting a different type of mortgage loan, like something called a conventional loan, which is issued through private lenders, then you can get away with only putting 3% down of the purchase price if you're trying to get your first single family residence. So for example, again, if a property costs $500,000, then 3% of that is going to be $15,000 down. And you're going to need a credit score of at least 620 minimum in order to be approved for this mortgage loan. But again, that $15,000, that's what you would need as a down payment. Now, honestly, there's so many different types of mortgage loan programs out there, so I'll talk more about that in step 5. Because really, there's actually some mortgage loan programs out there to where you don't need to put anything down. I actually made a full in-depth video not too long ago talking about 4 different ways that you guys can buy a home without putting any money down. So if you guys are interested in watching that, then feel free to browse my YouTube channel or hit the link in the description below. But anyway, something else you're going to have to pay for besides the down payment is going to be something called closing costs. You guys are going to have to pay something called closing costs, and you're also going to want to have something called reserves as well. Closing costs are pretty much processing fees that you pay to the lender when you close on your home. And these fees are going to consist of stuff like origination fees, appraisals, title insurance, private mortgage insurance, property taxes, and so on. But these closing cost fees are usually going to be around 3% of whatever the purchase price is. So if you're getting an FHA mortgage loan to where you only put 3.5% down, then you're going to need to put another 3% down to take care of the closing costs. So for example, if a property costs $500,000, then you're going to need roughly over $33,000 to buy that home. And then on top of that, banks want to see that you have at least 3 months of reserves. And for those out there that do not know what reserves is pretty much your mortgage payment money for the next 3 months. So if your mortgage is $4,000 a month, $4,000 times 3 is going to be $12,000. So now we're going to add that same $12,000 to the $33,000 that you're using for a down payment and closing costs. So that now brings you to a grand total of $45,000 if you're trying to buy a $500,000 home. Now there are other ways to get around paying for closing costs, like having the seller pay for your closing costs. So realistically, you can take $15,000 off of that $45K. But the way to make the seller pay for your closing costs is to have your real estate agent negotiate that for you. I'm not going to talk about it too much in this video because I already talked about it in another real estate video I made. So if you guys want to, feel free to browse my YouTube channel or hit the link in the description below. But there's definitely a way to get around paying for those closing costs up front. So your real number and what reserves in a down payment is only going to be $30,000 if you guys are trying to buy a $500,000 home. So just remember, ladies and gentlemen, the lowest down payment that you can ever get away with is either going to be a 3.5% or 3% down of whatever the purchase price is. Now, of course, there are mortgage loan limits, so always check what that number is for your personal county. Like for example, where I'm from, Los Angeles, the mortgage loan limits for both FHA and conventional is going to be $1,089,000. Anything after that limit, you're definitely going to have to put more than 3% or 3.5% down. So use this information to determine how much you personally need to save up for your down payment. But moving on to step number 4 now, determining your home buying budget. You can go on online websites such as Redfin, Trulia, and even Zillow to see what properties are going for nowadays, especially the ones that you're interested in. Once you have an idea of how much the property is going to cost that you want, then that's going to determine what your down payment and what your closing costs are going to be, so that's going to let you know what you need to save up. Once you have an idea of how much the property is going to cost that you want, then that's going to determine the down payment and the closing cost money that you're going to need to save up. Like for example, if you guys want a $400,000 home and you're getting something called an FHA mortgage loan to where you only put 3.5% down, the 3.5% down of $400,000 is going to be $14,000 down. And again, closing costs are usually about 3% of the purchase price, so you're going to need another $12,000 right there. And also don't forget about the money that you're going to need for reserves as well. So really, I would say to have about roughly $36,000 saved up if you guys are trying to buy a $400,000 home. But moving on to step number 5 now, researching the loan programs. So really guys, there's really only about 4 different types of mortgage loans out there that most people in their lifetime tend to get. Now for my people out there that know a lot about real estate, I know you're going to mention, oh, what about non-QM mortgage loans? I'm not going to talk about non-qualified mortgage loans in this video because I'm just trying to help the average person achieve buying a home one day. But if you guys want to stay tuned, then in a future video, I'll talk about what non-qualified mortgages are and how they can actually work in your favor depending on the case scenario. But right now, let's focus on the 4 main mortgage loans that a lot of people tend to get. The 4 main mortgage loans are going to be FHA, conventional, VA, and USDA. So we already briefly talked about what an FHA mortgage loan is, but for those that don't know, this is actually a government-backed loan that allows you to put 3.5% down of whatever the purchase price is. And the minimum credit score needed in order to obtain this mortgage loan is going to be a 580 credit score. You can, however, still get this mortgage loan if you have a credit score of 500 to 579, but at that point, you're going to have to put way more down, like 10% down. So honestly, I don't recommend doing this, so always strive to have a good credit score. But with this mortgage loan, you can buy a 1 to 4 unit multifamily residence while only putting 3.5% down, and you do not have to be a first-time home buyer in order to obtain this mortgage loan. But keep note, if you guys get this FHA mortgage loan, then the property has to be your primary residence anywhere from 6 months to a year. Now, the next mortgage loan is going to be called a conventional mortgage loan, which is issued through private lenders, and you guys can actually get this loan while only putting 3% down. The only catch is, though, is that this has to be your primary residence, and you have to be a first-time home buyer if you want to qualify for that 3% down. And for those that don't know, a first-time home buyer is considered if you haven't bought a home within the last 3 years. The credit score you usually need for this conventional mortgage loan is going to be a 620 or above, but if you guys guys have a better credit score than that, then you're actually going to be receiving a better interest rate than you would have if you had a lower credit score. So again, always try to have a good credit score. The next mortgage loan is going to be called a VA mortgage loan, and this VA mortgage loan is only exclusive to people who are in the military. What's special about this mortgage loan is that you don't have to put any money down. And another special thing about this mortgage loan is you don't really need a high credit score in order to get this mortgage loan because it's a government-backed mortgage loan just like the FHA loan. You can be in the 500s and still obtain this mortgage loan depending on what lender you're going with. But obviously, you always want to have a better credit score so, you can get a better interest rate. The good thing about this mortgage loan though is you can actually buy a 1 to 4 unit multifamily residence while putting no money down. And not only that, but you won't be required to pay something called PMI, private mortgage insurance. Because typically, whenever you get a mortgage loan and you're putting less than 20% down, you're going to have to pay something called private mortgage insurance. And what private mortgage insurance does is it protects the lender just in case you default on the loan for whatever reason. Now, the last mortgage loan that a lot of people tend to get is going to be called a USDA mortgage loan, which stands for United States Department of Agriculture. If you guys can find a home in a rural or a suburban area, then you can actually buy that home using this mortgage loan without putting any money down. The only catch is though, this is only going to be for a single family residence and you're going to be living somewhere out there in the wilderness away from big cities. But if you guys are into that kind of stuff, then yeah, you don't need any money down if you guys are trying to get this mortgage loan. But after you guys done all your research on which mortgage loan program best suits you and you feel that you're ready now, then you can do step number 6. Step number 6 is going to be getting pre-approved for a mortgage loan. So to get pre-approved for a conforming mortgage loan, these are a few things that you're going to need. Lenders are going to need a copy of your social security, your last 2 months bank statements, your last 30-day pay stubs, a copy of your ID, and W-2s from the last 2 years. So if you guys are ever looking to get pre-approved for a mortgage loan, I actually have a really good mortgage loan officer that I work with personally on my team, and he goes by the name of Richard. He specializes in all of these mortgage loans that I just talked about, and even plenty of more, including non-qualified mortgages. So if you guys don't have a lender that you're currently working with, Richard on my team can definitely help you guys out and give you the best interest rates as possible. I'll leave all his information, including his email and his Instagram, in the description below. And also, if you guys are finding any of this information helpful, if you guys could do me a favor and hit the like button, I would truly appreciate it because it really helps me out a lot, and then it's also a great way to help support the channel. But anyways, moving on to step number 7 now, which is finding a real estate agent. After you're pre-approved for a mortgage loan, find a good real estate agent that you can really connect with and feel comfortable working with. It's very crucial you guys get a real estate agent and do not try to tackle this on your own because there's a lot of stuff that you don't know that the real estate agent will know. So make sure you guys get a good real estate agent because they're literally going to hold your hand the whole way so that way you guys can purchase your first home or even your 10th home. Now, the last step you guys need to do in order to prepare yourself to buy a home is be ready to make a deposit once your offer is accepted. After you find a property you like and you submit an offer on it, the seller is going to want something called a EMD, which stands for earnest money deposit. And what this pretty much is a good faith deposit showing your interest in the property and that you're not going to be wasting anybody's time. And this deposit that you're making is usually going to be about 1 or 2% of whatever the purchase price is. And it's actually going to count towards your down payment, so no need to worry. This is not extra money that you need to come up with. But after this, you would then just continue to listen to your real estate agent all the way up until you close on your property. And congratulations, ladies and gentlemen, you are a homeowner. If you guys follow these 8 steps that I just mentioned, then you're definitely going to own a property in no time. I actually myself just closed on an investment property, which is a multifamily residence that's producing almost $2,000 in cash flow every month. I'm going to make a video on it soon, and I'm actually going to start changing my content to more vlog style type videos so that way I can show you guys more real estate videos and possibly even interview videos coming soon. So if you guys want more knowledgeable content in regards to real estate and real estate investing, so that way you guys too can own properties and start receiving cash flow every month, and comment the word free game so that way I know you guys are interested in these kind of videos so I know to keep making them for you guys. But that's going to wrap it up for today's video, guys. I hope you guys found value in any of this information. Let me know in the comments, how soon do you think you're going to get your first home? I would like to know. But if you guys made it to the end of the video, we are at 36,757 subscribers at the time of this recording, so I do appreciate all who watch. I do post weekly videos for those that don't know, and if you guys haven't yet already, don't forget to hit the like button, subscribe to the channel if you guys haven't yet already, and don't forget to hit the notification bell so that way you guys get notified every time I post a new video. And again, we talk about personal and business credit, real estate, and other financial related topics, so if that's something you're into, then you're probably going to want to consider subscribing. We talk about how to get high limits on your guys' credit cards, we talk about how to boost your personal credit, how to obtain business credit, we talk about real estate, we talk about mortgage loan programs, we talk about all that. So this is your one-stop shop. And one more time for those that don't know, I'm a licensed real estate agent and a licensed mortgage loan originator. So if you guys have any questions in regards to real estate, all my information will always be in the description below. But thank you guys so much for watching, and I will see you in the next video. Thanks for watching.